Hello and welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dreams of owning a home or investing in one. Today, I want to speak about the controversial community affordable loan solution that has recently been presented by Bank of America. It actually is a program that they had before. They just decided to bring it back. This time, though, they are targeting Black and Latinos. Now, even though they're doing this, to be quite honest with you, it is open to everyone. It's just being marketed to those two particular groups. Okay, that's it. So a lot of people who say or feel that this is racist, it's not racist because the loan program is open to everyone. It's just the marketing is towards those two groups. That's it. Next, let me talk a little bit more about this program. So it says it's no down payment, no closing costs, no credit. That's the draw. That's the marketing ploy. But if you go on their website and if you actually pick up the phone and call them, you will find out that there's actually a lot more criteria than that, which unfortunately I see that many other people have not done. So let's go through this, all right? So even though they're not going to check your credit, they are going to check to see whether or not you have any judgments, tax liens, or any past due payments that are over 60 days. So if you are interested in buying a home and you're interested in this particular program, any bill that you have that's past due, particularly those within the 60-day limit, I would go ahead and pay that. All right, next. Even though it's a no down payment loan, you can still put down a down payment. It just has to be below 20%. So 20% and below, you can put money down. All right, don't let the wording confuse you. All right. Next thing that you should know is that you don't need to be a Bank of America customer in order to be to qualify for this loan. But of course, if you're a Bank of America customer, you're going to get certain privileges that someone who is not a Bank of America customer will get. Next, this is strictly for first-time home buyers, people who have never bought a home before. I ask because I know that legally, a first-time home buyer is someone who hasn't bought a home within 3 years. But they said to me that this is their particular product and that particular stipulation does not apply. It has to be someone who has never in their entire life owned a home. And that property has to be their primary residence. So you cannot be an investor and try to use this program because you will be disqualified immediately. All right. Now, the interest rate that they are offering is going to be a little bit lower than the market, right? I do believe, because I have spoken to the banks before, and they said that the interest rate does go according to your credit. So even though they say that they're not going to be weighing your credit, I do believe it is under my understanding that that'll still be applied. I did not ask that specific question when I spoke to the lady. I forgot to. However, as far as the interest being a little bit lower than whatever the market is, that I can definitely confirm. Now, the other thing is that it has to be in certain states. All right. So you can live in one state, right? But if you're going to buy a home for the first time, it has to be in certain, cities and states. Like it has to be Charlotte, North Carolina. So you can live in New York, but you want your home to be in Charlotte, you would have to buy your home, in Charlotte. I believe Philadelphia is another one, LA, Dallas. There's a few others. Detroit. Your home that you're going to buy has to be in those places. All right. So you're limited right now. From my understanding, when I was speaking to the lady, those are the states and cities that they're starting off with. So I guess further down the line, if this program is successful, they will expand it into other areas, because she said that this is where they're starting off. Okay. Next, she told me that there is an income limit, and the income limit depends on where you live. She said for LA, it's about 150,000. For Charlotte, it was 100,000. So you can't make more than that, right? The next thing is that you may, depending on where you are at and your situation, you may be required to take a home buyer education. That's actually also on the website as well. You can look that up. Another thing is you will have to pay mortgage insurance. It's going to be at a reduced amount. It's not going to be regular, and it's going to vary. Another thing is the loan amount. The loan amount is going to be up to $647,200 if you put down 3%, and it will be up to $940,800 if you put down 5%, and the property is in a high cost area. Okay. Other fees will definitely apply. You will be required to pay for an appraisal. So you have to keep those things in mind. Now, here's what a lot of people don't realize is that no down payment, no closing, that doesn't necessarily mean that it's going to be cheaper than, let's say, if you get a regular conventional loan. Because what banks tend to do is they'll add all of the closing costs and what have you. They'll put that into the loan amount. So your payments are actually going to be higher than if you were to go for a regular conventional loan, right? So what I would do, since this particular loan is not for me, because number one, I'm an investor, so I do not qualify. Okay. Number two, if I were a first-time homeowner, or first-time home buyer rather, personally, I would not take this particular loan because I am frugal and I want to pay as little as possible. So I don't want for everything, the closing costs and everything, to be spread out in 30 years. I want to pay everything up front, which is what I did. Okay, I am not going to knock anybody who wants to choose this loan and who wants to go with it. But what I will say to you is do the math. Have the bankers and even your accountant, if you will, sit down with you. Make sure you get all of the numbers, okay? And find out exactly how much you are paying, how much you will be, find out how much you would be paying if it was conventional, how much you would be paying if it's under this community affordable loan solution, and any other, because there's so many different loans out here today. It's not even funny. Find out about other loans that they have and other loans that other banks have. They can give you an estimate as far as how much you would be paying. Look at that estimate, see if it's for you, see if you believe that you are disciplined enough to pay that, and then go with what is best for you, because we're all of us are not the same. All of us are not the same when it comes to income, when it comes to our expenses, when it comes to our lifestyle, when it comes to discipline. We're not all the same. So let them give you a good estimate for each loan product that they have before you move forward. That's my advice. If you are going to go and take this particular program, honestly, I believe that it may be best that instead of buying a single family, you buy a multifamily. Now, from what I see in the paperwork, there's conditions on buying a one family and a two family, but I don't see anything about 3 and 4. All I know is that the lady said you can buy a multifamily. The Bank of America person that I spoke to on the phone. So call your Bank of America just in case it's different from mine. All right, and find out what it is that they require. As a matter of fact, it may be best not to call the Bank of America in the city and the state in which you choose to live. So, for example, I'm here in New York, right? Let's say I want to move to Charlotte, North Carolina. Then I would try and ask them. Normally, when you call the loan department, though, they have their own place where they transfer you, but you may just want to ask, can I speak to somebody in Charlotte, North Carolina? And then from there, speak to someone who handles the loans and let them tell you what to do. If you want to go to Dallas, then I would call the Dallas office, etc., etc. But yeah, normally the loan department does service. From my understanding, it services the entire United States. All right. So that's what I would do. And then after a few years or so, what I would do is I would refinance that property. And I would only refinance if it comes down 2 or more points. Otherwise, I would just leave it alone. That's what I would do. So, guys, there you have it. That is my rundown of the facts as far as what this program actually offers, number one. Number two, I gave you guys what I would do. And what I would do, please understand, is not necessarily what you should do. You have to do what's best for you. And number 3, I gave you the play as far as if you are going to go this route, what you should do. All right. And that is buy a multifamily. And then when the rates go down, refinance. Now, let me just add this also. With that multifamily, I would use a short-term rental for the beginning. And then later on, I may, well, no, sorry, scratch that. I would actually try and get a regular tenant first, give them maybe a 1 or 2 year lease, and then turn it into a short-term rental. The reason why I say this is because when you're a new homeowner and you just acquire a home, there are so many things that you will have to pay for that you're not used to paying for. And when you do short-term rental is actually a little bit more expensive because you have to buy furniture, you have to furnish the property. You really have to market it a little bit more so than if you just had a regular tenant. It's a little harder, in my opinion, to market a short-term rental than as a regular landlord, right? So that's what I would do in order to keep, have some cash flow coming in as quickly as possible. And then I would turn it into a short-term rental. And that's how I feel the best play and the best way to survive underneath this particular loan program, because I'm pretty sure that your payments are going to be higher than a regular conventional, but definitely sit down with someone and do the numbers and just verify first. All right, guys, so that's all I have for you tonight. Hopefully the information that I shared with you will help you make smart financial moves. Feel free to pass this amongst your friends. Remember, each one reach one, teach one. Bye for now. Until next time, have a good night.